Well, hello and welcome to this Money Control Live. You're watching Morning Trade with me, Nandita Khemka. Well, over the next 30 minutes, we'll be talking about the setup for the markets after yesterday's rout, all the stocks in news, all the global cues, and of course, all the macro cues back home as well. Also, if you have any stock-related queries, comment on our live feed and we'll have them addressed by our technical expert on the show. But before we do all that, let's take a look at the top headlines at this hour. Wall Street ends mixed in a volatile session. Banks recoup some losses as US President Joe Biden says that American banking system is safe, assures taxpayers they will not have to bear losses in the aftermath of the SVB collapse. The street is keenly watching out for the February inflation print that is due later today. Asian markets open with deep cuts with the Nikkei losing over 2%. However, the SGX Nifty is indicating at a positive start for the Indian markets. Fears of a financial crisis after the SVB collapse see crude correct over 2% to a little over $80 a barrel. Gold and silver, meanwhile, see a rally as investors seek safety in safe haven precious metals. Inflation remains above RBI's comfort zone of 6% for February. Cereal and milk prices are the key culprits, even as vegetable prices fall. Is the stage set for another 25 basis point hike in April? Also, stocks in focus today are IndusInd Bank, Airtel, Lupin and GAIL. Well, let's first bring on board our technical guest for today. Rahul Ghose, who's the founder and CEO of HEDGED, joins in this morning. Good morning, Rahul. Good to have you on the show. Yesterday we broke below that 17,200 mark, even though the SGX Nifty is hinting at a positive start. Do you expect the index to break below that 17,000 mark as well, either today or tomorrow?
Good morning. So there's a couple of very interesting points on the index. So the index has been trading in a very broad range where 17,250 was the one end of the range and 18,040 was the other end of the range. Now the 17,250 range got taken out yesterday. But even though it got taken out yesterday, you will notice very cognitive facts that the 17,000 PE still has the highest open interest. And even more interestingly, the 17,300 and 17,400 put options, if you look at the monthly OI data, still have sold put options. Now, mind you, this is in the money put options, which means that there are some people who are still betting that prices will zoom back beyond 17,300 and 17,400, because otherwise they will not hold on to their in the money put options with such deep losses. We are still not in a bearish trend. We would turn into a bearish trend only below 16,740. The trend is merely changed to sideways to bearish right now. We don't expect the Nifty to break 17,000 today. In fact, it is suggesting a positive start as well. Instead, once prices cross 17,500, there is a level for shorting, which is what we are looking at currently for the near term.
Right, the trend is still not bearish, it's sideways to bearish at best. Hold that thought, Rahul, we'll come back to you, but let's also go across to Latha Venkatesh to decode the inflation figures that came out yesterday. In fact, inflation remains above that 6.4% mark, right, for February. This was the second month that inflation is above the RBI's comfort zone of 6%. Tell us what were the key culprits behind the inflation spiking to above 6% once again, and 25 basis point given in April?
Well, we'll have to see about that. But just first, the numbers, 6.44 was higher than street expectations, which were at 6.29, 6.3%. Yeah. And, you add that 6.5 in the previous month, January. The RBI monetary policy is measured quarterly. So this quarter, Jan, Feb, March, unless you get a sub 5% in March, you're not going to go below 6% for the quarter. So it's a given that the mandate is violated, mainly because of two elements, cereals and milk. Cereals is coming in at 17.3 or thereabouts, above 17%. Last month it was above 16% year on year, that is. So it's not really cooled off that much. Even month on month, the prices are a tad higher. There are people who find fault with the way it is getting computed. But, the MPC has to work with what is given to them. You can't start arguing with the numbers. Milk was 8.7 last month. February, it is up 9.79%. That's serious and widely consumed item. So all of food inflation is up 5.95 versus 6% last month. Not a very comforting zone. Core inflation, which is, remove food and fuel, what is services inflation, which can't be imported, that one is still at 6.1. RBI wants that down clearly below 6 because it's the persisting inflation. So all these arguments point to the fact that the Reserve Bank will still have to fight its inflation battle. Mind you, its mandate is not to keep inflation below 6%. Its mandate is to keep inflation at 4%. It can make an error up to 6%.
Right.
Now, you're not even in the error zone. So there is that pressure. But on the other hand, there are the US CPI numbers today, and the US FOMC meets on March 22nd. Much will depend on that. And the argument will always be that monetary policy works with a lag.
Right.
So if the world is going through a crisis of confidence on its biggest fuel of growth, banks, then clearly growth is going to slow down rather seriously.
Exactly.
And therefore, that work is done. The Reserve Bank should be forward-looking. And the MPC, some members will argue that the world is itself slowing Indian economy. I mean, you can't grow alone.
Yeah.
And therefore, there is no need for a rate hike. So April is still very open. There are so many events before that. But even otherwise, I think April hike may not be a given.
And even if that happens, it won't be unanimous for sure.
Oh, no, it's not. It definitely two people are going to vote against. But it's a very, very open. And there, so many events can happen between now and...
Yeah, let's talk about, you mentioned US CPI, that is due later today. Of course, we had that Silver Valley Bank collapse. A lot has changed since Friday, you know. Till Friday, we were expecting a 50 basis point hike from Fed. And today, there are some 6% odd people who don't even expect a hike in March policy, right? Because of what has happened or what has transpired with the, financial institutions in US. So how much percentage of people are actually not expecting a hike at all this time around?
That changes by the minute because the CME Fed Watch tool is voted on continuously. Those who voted for a hike yesterday of 50 bips may have lowered to 25. So hourly it can change. The point is, so much rides on the CPI number that will come today. The extreme view taken by Citi is that the Fed will not concern itself with the banking instability. It will be a very minor input. The major input will be the jobs data. They are worried about labor, and the jobs data was very strong. It came in, at 300,000. The market expectation was 265,000. Of course, hourly wages dropped a bit, but not enough to tell you that the labor market is weak. There are still like almost 2 jobs available for one worker, and therefore the Fed will slow down the economy. It will want to create unemployment. That's the Citi view. At the other end is the Goldman view, which became very popular, that there will be no hike at all, because of the financial instability, and the Fed will not take its eye off that. Nomura also believes there will be a 50 basis hike because the economic signs are simply too strong, and the banking instability, as many people say, is idiosyncratic. It is not a broad
systemic issue.
The large banks, the large banking system is healthy, has enough capital, has deposits from other areas. This was an idiosyncratic, a peculiar case which was dependent on the VC money being deposited, which had to be withdrawn for whatever reason. So we should not confuse this as an overall banking crisis. It's a deeply divided market. On Friday when I checked, the vote was 75% expecting 50 bips and about 25% expecting 25. By the time it came on Monday, it was 97% or 93% expecting 25 basis and 0 people expecting a 50 bips. There was a 6% expecting no hike at all. So things are changing actually by the hour. Even after that 97, the number of people expecting a single hike came down to 75. And the number of 50 bips went up a little from 0. It went to 25. So I don't think we can call the last word. We have the CPI inflation, and we will have hopefully other banking feathers getting smoothed in the run-up to FOMC. Then on the FOMC day, it's quite possible that the banking crisis looks like a thing of the past. It could well happen. So I think all cards are on the table. We have to see which one the Fed picks up.
So all cards are on the table where FOMC is concerned, even where RBI
and
is concerned.
RBI is concerned.
Well, with that, Latha ma'am, thanks a lot for taking out time and putting things into perspective for us. Let's go back to Rahul then. Rahul, we were talking about Nifty Bank as well. Yesterday, we saw the Nifty PSU Bank Index slump somewhere around 3%. And even private banks, including IndusInd, got hammered out of shape. What is your call on the entire banking pack and IndusInd in particular?
So a very interesting data point over here is that if you look at the last 10 years data of the index, you will notice that whenever the index has fallen 3 months in a row, the fourth month, it has rallied between 4% to 9%, if you look at the last 10 years history of the index. So that's a very interesting data point that we looked at yesterday. Bank Nifty actually has its short straddle still at the 40,000 level and the 40,500 level when Bank Nifty is close to 39,500. Again, just like how Nifty is showing in the money action, even Bank Nifty is showing us in the money action where traders are still betting for a small rebound. Another point is Bank Nifty in its it has not closed below its 200-day simple moving average. It is actually paused there yesterday. Yesterday's fall actually made it pause there. So still there is a bearish closing below the 200-day moving average for Bank Nifty. We still remain with the sideways to bearish view. Now, to play this sideways to bearish view, we've come up with a very interesting derivative strategy, which we will be discussing on the show as well. But till 40,000 is taken out, we are not all guns blazing going short.
Right, so that's the call on Bank Nifty. Let's also talk about specific stocks then. Stock of the day for me today is Lupin, because this company has been plagued by regulatory issues. Some of the units have come on the US FDA radar. The latest being US FDA has completed inspection of Bio Research Center in Pune and has given no observations. If you look at the stock, it was down somewhere around just about 1.5% in yesterday's session. And over the last 6 months also, it's not done much, just down 2% or so. But do you think this bit of news will prop up the stock a bit in today's session? You expect more upside on the charts now?
Currently, if you look at Lupin, it is trading below its 20-day exponential moving average, which is the near-term trend reversal indicator, where once prices close with a bullish candlestick pattern above it, only then when we can say that it turns bullish. And prices are quite far away from it. The 20-day EMA is currently at 710. So till that gets taken out, or till the momentum indicators give us a buy, the momentum indicators are trying to form a divergence. It's not yet materialized. This is on the weekly chart we're talking about. So till either materializes, we will not go long on Lupin. Till then, we would be in wait and watch mode.
Right, wait and watch mode on Lupin. Let's also talk about Bharti Airtel. Morgan Stanley has come out with a report. In fact, a lot of other brokerages have also come out with positive reports on Airtel, given the fact that, even the CEO had indicated that the next tariff hike may come as early as mid-2023. So even, ARPU comfort is something that brokerages have cited when they have upgraded the stock. And this morning, yesterday, in fact, Airtel had rolled out higher minimum recharge plans in the remaining 3 circles in which it hadn't really undertaken any hikes. So it is actually the first mover in taking entry-level tariff hikes. And, this tariff hike will be 1.3 to 1.5% accretive to revenues of its India mobile business. That's according to Morgan Stanley. So there's a pretty bullish call coming in on Airtel. What would your thoughts be on this stock?
So we have 2 buy levels actually in Airtel. Airtel is right now right in between. And if the stock moves a little bit down at around 370 levels, there is a buy which one can initiate with a stop loss of about 354. On the other hand, if this positive news causes the stock to go up, the near-term resistance for the stock is between 405 and 408. So once 408 gets taken out, one can again initiate a buy. So depending on where the stock moves, either downside or upside, both times, once this trigger happens, one can initiate a buy in Airtel. It is still not come out of a downtrend, mind you. If you look at the daily chart, it's still forming lower highs and lower lows. So that is why we are giving a trigger-based buy and not giving an ad hoc buy at the current level.
Right. Let's then take in some viewer queries that are trickling in this morning. The first one is coming in from Satya CK, and he has a query on Mrs. Bector's. This stock is very close to its 52-week highs. Over the last 6 months, it's rallied somewhere around 44%. How would you read this on the charts? Would you have any buy and exit strategies on this one?
So lovely chart of Mrs. Bector's. It has constantly been taking for the last year support at its 20-day EMA. Every time it comes near the 20-day EMA, it forms a nice rounding formation and then bounces back up. However, if she or he is holding Mrs. Bector's, I would advise an exit at current level, because if you look at the daily chart, there's a negative divergence formed on one of the momentum indicators, and he can re-enter back once price comes close to 490, 495 levels if he still wants to hold the stock. But at the current price, I would suggest exiting, unless he's a very long-term holder of the stock, in which case he just has to weather out the small correction of 7-8% that is going to come about right now.
Right, so that's the call on Mrs. Bector's. You can look at exiting unless you are a very long-term investor. The next stock on my list is Mahindra CIE. This counter lost somewhere around 8% in yesterday's session. Of course, in fact, Mahindra Group has offloaded somewhere around 6% stake via a block deal. Looking at the charts, would you expect this counter to move up, or do you expect more weakness on the charts going forward?
No, so Mahindra CIE, we would not initiate a buy right now, because it's come close to its lower Bollinger Band, where the -2 standard deviation lies. It's come close to that. Until we see a reversal from there, we are not going to be touching. It's constantly forming red candles. In fact, the last 9 to 10 days, it has been forming red candles. So we don't want to preempt a buy over here. We would stay away from this counter and not initiate a buy right now.
Right, stay away from Mahindra CIE. Won't be initiating a buy right now. Let's also get in some queries on the cement basket. We have some queries on Amuja Cement as well as UltraTech Cement. Which of these stocks are looking good on charts right now? Would you advise anyone to pick up either of these counters now?
So if I look at the Amuja Cement's chart, even though UltraTech is in an uptrend, the Amuja Cement's chart per se from a technical perspective is looking better. One can actually initiate a buy with a stop loss at 330 and look for higher targets, of the first target being around 395, 397. 2 points over here in the Amuja Cement's chart. One is that after the downtrend got over, it was making lower highs and lower lows on the weekly chart as well, and it was making the same on the daily. But then it had a nice rounding formation pattern again, and it broke out from that pattern. That breakout did not sustain, and prices have come back to the buy level, hovering around the 20-day EMA. This level, which it is currently hovering around, is actually a demand zone. So that is why we are initiating, it's better suited for the long side. And the cement sector, if you notice, for quite some time has not been doing well. And a lot of charts now have been forming this rounding bottom pattern and trying to break out of them. A lot of cement stocks are actually looking good on the chart. So we initiate a buy. You can keep a stop loss around 330 and look for the first target around 397.
Right, so that's the call on the cement pack. The next stock, in fact, saw another block deal yesterday, was Sona BLW. In fact, Blackstone has exited its stake and sold 20.5% stake for 4,900 odd crores or so. But, it did see very strong demand from FIIs, sovereign wealth funds, domestic mutual funds, as well as insurance companies. Given the fact that the stock is very close to its 52-week lows, and over the last 5 days, it has shaved off somewhere around 11%. Do you think this is the level that one could actually look at entering into the stock now?
So we generally, if you notice, generally mentalities of traders and investors, they tend to pick stocks when they are at 52-week lows and tend to exit stocks when they are at 52-week highs. Basically, if you have 2 employees, you fire the employee that's doing well and you retain the employee that's doing badly. That is not the kind of philosophy actually to be put in when you're investing. To a stock that is hitting 52-week low is hitting 52-week low for a reason. So I would not suggest a buy on this stock. any stock which is actually hitting 52-week low, the first sign that any trader or investor should look out for is it closing above its 20-day EMA? And when it is closing above its 20-day EMA, ideally it should not be overbought on the momentum indicators. These are the first few signs that someone should look at. Taking that into consideration, we would not enter this stock right now at its 52-week low.
Right, so avoid entering into Sona BLW at current levels. Next query is coming in from Kritima Pandey, and she has one on HDFC Life. Now, we know that life insurance companies came under a fair bit of pressure after budget. In fact, over the last 1 month, this stock has shed somewhere around 7%. What would your advice be to somebody who is looking to enter into this one?
So both HDFC Life and SBI Life is close to its near-term buying level. And because the ladies asked for HDFC Life, the buy level on HDFC Life is around 455. Currently, it's trading at 478. So there's still a little bit of pain over here expected, but around 455, one can initiate a buy in HDFC Life. And if you have a medium-term view on HDFC Life, you can expect targets of even 550. In the stock, which is just before its near-term supply zone, just before which your elder A bands are showing that it can go up to. So around 455, we initiate a buy, and we can expect about 550. Even from a fundamental perspective, these stocks are looking attractive, and at the 440, 450, 455 level, it definitely looks attractive even from fundamental perspective.
Right, I hope that answers your query. The next one is coming in on Tech Mahindra and Infosys. Of course, these two stocks have been in news on the back of the top tech rejig. In fact, Tech Mahindra was up somewhere around 7 to 8% in yesterday's weak market. Which one would you say is looking attractive at this juncture? This query is coming in from Sai Reddy.
So we are not yet getting into IT. IT is currently not out of the woods. If you notice stocks like Wipro, if you notice stocks like Infosys, they are not completely out of the woods. So we have not yet initiated a sector buy in IT per se. Having said that, if you look at Tech Mahindra has actually formed a very bearish candle yesterday. It moved, it gapped up, but it couldn't sustain, and prices closed close to the low of the day. So we wouldn't initiate a buy on IT as yet. However, like we said, insurance sector, this sector is also near the bottom. But until that happens, and until we get a signal from maybe our GAN levels or the momentum indicators in the short term, we are not looking to initiate a buy even on Tech Mahindra. If the gentleman is holding Tech Mahindra, or if he wants to enter Tech Mahindra, the level to enter is at 1085. Where there is a demand zone coinciding with its 20-day EMA. The stop loss he can have is 1035, and he can hold for higher targets.
Well, I hope that answers your query on the IT pack. The next one is coming in from Funny PG, and this one is on IRB Infra. He has bought some shares at 29 rupees 94 paisa, and he wants to know what is the stop loss that he should keep for this one.
Okay, so if he's holding IRB Infra rather than a numerical stop loss, I would suggest for him to put the 20-day EMA on the weekly chart and look for 2 candles closing below it, or at least one negative bearish closing below the weekly chart of the 20-day EMA. If he's not very savvy with charts, then he should have a stop loss of 26.10, that is 26 rupees 10 paisa. And he can hold on to it. However, if you look at the chart structure for IRB, it is not the most conducive for a long. If you look at the Bollinger Bands, they are in a very tight sideways range. Ideally, you want to be in a stock where the bands are being walked by the candles. So there are better picks out there instead of holding on to IRB is my opinion on this.
Right. So we've come to the last query of the day. Ashok Kandukuri has a query on Reliance Industries. This counter has come under a fair bit of pressure of late. Last 5 days, we've seen, the stock shave off somewhere around 5% or thereabouts. Would you expect any sort of a rebound going forward in the next couple of weeks?
So Reliance is actually, again, we won't initiate a buy right now in Reliance. The only buy we would initiate is at beyond 2340 levels. Currently, the price is trading around 2290, if I'm not mistaken. So beyond 2340, we would initiate a buy. Again, not the best stock to hold from a risk-reward perspective. There are better counters out there, like he can look at a National Aluminium around 79.5. There's a good buy level. So purely from the time value of money perspective, where it's not only the return on capital, but the time you need to make times worth of your money as well, we won't initiate a buy right now in Reliance. One more point that I would like to mention, if you look at the structure of the market currently we are in, where one set of data points are saying that prices are going to move towards the downside on the index, and one set of data points are saying that price is going to move up in the index. The best way to play this is using a very, very simple derivative strategy, which can make you money if the index goes down and can make you money if the index moves sideways. And something that your viewers can look at is buying the 17,100 PE of April end expiry, if they are savvy with options, and sell the 17,000 PE of 6th April expiry. The buy leg is of end April expiry, the sell leg is of 6th April expiry. The advantage of doing this, and they should initiate this once there's a bounce of about 50 to 70 points on the index. The advantage of doing this is no matter where price goes between 0 on the downside and 17,600 or 17,700 on the upside, the trade would close for a profit. So this is something very interesting that is developed on the chart, which is a more prudent way to play this market right now.
Right, that's an interesting F&O strategy coming in. But Rahul, also leave us with some stock recommendations for viewers for the day.
Okay, so one is National Aluminium is looking good. One can initiate a buy at 79.5. There's a very, very nice demand zone at 79.5 with a very bullish leg out. The stock is generally not being affected with the downtrend that is currently going away as well. So 79.5, we are initiating a buy on National Aluminium. Stop loss would be at 75.5. The first target would be at 82.5 and the second target would be at 84. One can look at a short also on Petronet. Petronet is currently trading, I think, around 235. So once the stock goes below 233, one can initiate a short with a stop loss above 237 and lower targets of 230 and 227.
Right, so those are the stock recommendations coming in from Rahul for viewers this morning. Well, with that, Rahul, thanks a lot for taking out time and sharing your thoughts with us this morning.
My pleasure. Thank you.
Well, with that, we've come to the end of this edition of Morning Trade. So it's a goodbye from me, but don't go anywhere because coming up next is Opening Bell. Stay tuned.